Talk to me about what you do when the metrics themselves are not encouraging, but there seems to be some enthusiasm around the CEO.
Yeah, look, it's a great question. So as I'm looking at Peloton's results today, in fact, we just got off the company's conference call a short while ago. I mean, this is very much a work in progress. Okay, so like you mentioned, Carl, Barry McCarthy took over as CEO. He's really very quickly working to rebuild this business model. Now, to be clear, success is anything but assured. There's a lot of challenges here for Peloton, both near and long term. But what's happening is, and these results show it, there's just a lot of repositioning happening right now within this business model.
Right. We've talked a bit this morning and the last few days about sort of deconstructing what was a very vertical model. How much does the Amazon partnership really add? Have you modeled that out?
We haven't modeled it specifically. I think it's a positive, because I think it's, look, obviously Amazon will bring Peloton products, particularly maybe their lower price products, to a bigger mass audience. That's a positive. It'll probably be done more cost effectively for Peloton. But I think more importantly is it shows where Peloton's going. And so Barry and his team have mentioned that Amazon's just a first step. I would expect to see Peloton products over time in other retailers. And I think this will be a more efficient, over time, this should be a more efficient distribution model for Peloton.
Speaking of models, Brian, this is a company that says it's on a journey to reach sustained positive free cash flow, but right now it's losing $650 million a quarter. So what are you modeling in order to get to a $20 price target?
Yeah, so, on the cash flow, so the team, again, mentioned today that they expect the next fiscal year to be, I think, free cash flow neutral. So that they've reiterated that guidance. In our model, now my team and I were looking at this, we're more conservative. We think that the cash burn at Peloton over the next, say, several quarters will probably be more significant. Now, one advantage Peloton has here is that they did end the quarter with, I think, $1.3 billion in available cash. Okay, so they've got, at this point, they have a pretty healthy balance sheet that gives us some cushion. Now, clearly, they're burning cash. That's a risk. But to answer your question on the price target, and again, I want to make sure it's really clear, and I say to our clients all the time, this is a long-term, highly speculative call that we have on Peloton. But we're looking at the longer term, even beyond our modeling period, the ultimate earnings power of this company.
Right. Okay. But so take me out to the out years then, 24, 25, and 26. You're assuming some sort of multiple there to actual EBITDA and free cash flow, correct?
That's correct. And that's how we get there. So we're looking out that far. It's going to take a while. I'm going to reemphasize that. It's going to take a while, but we are looking out that far. And the other, more qualitatively, what we've written, we put a nice long report out on Peloton just several weeks ago. And the point we make is, we think within this very broad fitness landscape, fitness and wellness, and there is a place for a better run, more capital disciplined Peloton. Now, I don't think, I think the initial expectations we saw maybe for Peloton through the pandemic are now off the table. I very much believe that the gym business, and I'll mention another company we cover, Lifetime Group Holdings, operates phenomenal large format gyms. I think that's a very solid play within fitness, but there is a place, I think, for a better run, more capital disciplined Peloton.
Yeah, it's difficult when the initial goals under Foley were to replace the gym membership at large. It's just those astronomically aspirational numbers. Which things would you look to turn around first? Would it be free cash flow? Would it be churn? Would it be subs? Would it just be workouts per sub?
Well, I think you probably start at the top of the P&L, sales. There has to be some type of stabilization in sales, and I don't think we're really seeing that yet. The underlying, there's a lot of moving pieces here with Peloton. The underlying engagement metrics for the company, meaning how consumers that have a Peloton at this point are interacting with the product, are still quite good. Okay, but I think what the weak spot has been getting that new customer. And again, there's a lot going on here. We're coming out of the pandemic, where during the pandemic, demand for Peloton was massive because there really wasn't another fitness alternative, right? So you're now we're working past that. Inevitably, there's been some pull forward in demand. Then you're also dealing with, I follow a number of consumer companies, and I still think the overall consumer environment is generally healthy, but there are weak spots. There is with inflation, with other pressures on the consumer, we are seeing some weak spots in spending. So that's another challenge for Peloton. And on top of that, the company doesn't mention this much, but there's competition out there. There are other products now. So again, to answer the question is, I think we've got to stabilize sales. That's really the first. It all comes from that. Stabilize sales, measure better the underlying demand for this product, and move from there.
Finally, what's interesting is, you see some turnaround stories, new CEO comes in, and communication is a bit Spartan. But McCarthy is rather expansive in his comments, and I would argue his color as well, wouldn't you say?
Totally agree. I think he's kind of saying it as is. I've not met Barry yet in person. I've obviously studied his comments and interacted with him, via the conference calls. But yeah, I think you're exactly right. I mean, he's kind of come in here and saying exactly what needs to be done, exactly the problems he sees with this business. And I think he's right on. It's just a matter of now actually executing successfully on this.
Brian, tough space. It's gotten a lot tougher. We'll see what happens. Thanks so much. Good to see you.
Thank you. Nice seeing you too.